To begin with, you have come out with a guidance of minus 0.5 to 1.5%. The quarter has been good with respect to revenue. Why have you, looked at the guidance or your guidance at the lower end is a little lower than previous quarter?
So if you look at the way the quarter two panned out for us, 3 of the 4 SMUs had a sequential growth. We also had a growth from Capco. From a revenue perspective, the momentum has started both in Europe and APMEA. Europe for the first time showed a growth after a lot of quarters. In terms of bookings, if you look at for the first half of the year, we had almost $9.5 billion booking, out of which we had 4 mega deals, and 2 of the mega deals we closed this quarter. And significant piece of that is renewal. But what is important is both the clients, both in healthcare as well as banking and financial services, helps us to build a momentum in these 2 clients. In terms of the quarter 3 guidance, we are given a forecast or guidance of minus 0.5 to plus 1.5. I would like you to look at the midpoint.
Can you also take us through the kind of demand climate which is there in the North American markets for you, especially the US market, given the kind of uncertainty which was there in the last couple of quarters? Do you see that you have a much better visibility in terms of demand coming in from many of your clients, which is who are in the BFSI space or retail or manufacturing?
Sure. If I look at our current pipeline, the pipeline is very robust. In that context, in spite of our bookings in the first half, we see a pipeline which has grown for us. And if I were to add a color to the kind of pipeline we have, there are 3 big opportunities. One is on vendor consolidation, which also includes cost optimization. Second one is very specific to AI. How we can help our clients modernize their applications and also help them transform their business, both the business process as well as the workflows using AI and agentic AI. And third is specific projects around AI to help create a business momentum for our clients. As far as specific to US and certain sectors, things vary. So if you look at banking and financial services, the pipeline is robust. If you look at telecom and technology, the pipeline is robust. If you look at healthcare, continues to be robust for us. Whereas the demand in energy, manufacturing and consumer is all dependent on a little bit on tariffs, because the clients are looking at how to change their supply chains, and that's also could be an opportunity for us as we move forward. And lastly, US clients, most of them go through budgeting process this quarter. So we'll have a much better view in terms of the kind of new demand that will come up for us in the month of Jan and quarter 4.
Now, can you take us through the margin picture of 16.7% compared to 17.3% in the previous quarter in Q1? I understand there is a one-off here as well, but what led to the margin growth or degrowth which is here?
So you're absolutely right. Our adjusted operating margins was at 17.2%, which is in a narrow band compared to our quarter 1 performance of 17.3%. We have said that as we invest for growth, there could be headwinds, but we are strong in quarter execution on both revenues, aided by the rupee depreciation, has helped us to stay in a narrow band. As for the 16.7% operating margins that we've reported, that includes a charge of provision for bad and doubtful debt towards insolvency for one of our clients, which we had to provision for in Q2. That's a one-off and will not recur.
Can you also, clarify on the kind of impact that forex or rupee depreciation has had on the top line and your margins as well?
So, rupee depreciation and the crosses have, in some sense, the dollar has weakened, and as a result, we have gained. We are not calling out the exact impact of Forex, but operationally as well we've improved. We have improved our utilization. It's visible in our data sheet. We've improved in our fixed price projects profitability. We have improved even in our SG&A. Even outside of this one-off of insolvency impact, our SG&A continues to optimize. So I'm quite pleased with the performance across the line items. And, we will continue to focus on these initiatives as we get into Q3 as well.
Saurabh, employee additions, I guess there's a net employee additions which is there. What is the kind of target that you have for this entire financial year, and any update on the kind of wage impact or wage hike that you are proposing, kind of given the fact that there is a lot of flux in this market given the kind of AI narrative which is going around?
Yeah, so if you look at the overall people supply chain, Aparna alluded to it, we have a better utilization, we have a lower attrition, we have added about 2,900 freshers from the campuses, and our overall net headcount has gone up by 2,000 people. So I think that's a good story. There is no target, it will be demand driven. We have had a strong bookings in H1. And as Srini called out, our job is to execute and on the revenue side. So as H2 unfolds, depending on the demand, we will continue to onboard people. But from a supply chain perspective, we seem to be very comfortable in terms of making sure that as demand comes up, we will have enough from a supply side. As far as wages, salary increases are concerned, as you called out rightly, micro environment continues to be very tough and fragile. So we haven't taken a call on when you will do the salary increase, but as soon as we decide, we will communicate on that.